Hey, good afternoon. This is Trader Tim from eMini Mind, and we're doing a Monday market analysis video. It is the 16th of August, 2021, and as you can see in the daily chart here, we've got about 45 minutes left in the trading session here, but we have another bottoming tail and are able to make it into all-time highs yet again. You can see the uptrend line here that looking for the market to either make a sort of breakthrough move where we move straight up for a couple days and then collapse back down to this trend line. Or option number two would be we could kind of just move sideways and chop around the negative 23% target. If I zoom out a little bit, you can see we did that back here where we kind of drifted higher to sideways and then had like a 3-day pullback to tag up on the trend line. And then the other scenario would be, now that we have completed to the negative 23, that we would just get a couple day pullback and then bam, hit the hit the trend line. At which point you want to watch for a situation like this where we have a gap up at lows to be able to buy that morning at the open, add to longs, and the trend, the uptrend would then continue. If we come down to the trend line here, this is a little bit of a ways out unless we come crashing down this week. If we come down to this trend line and we break it and we start to take out, like especially this swing low back here and break below that level, so it is a 43.65. If we break below that level, then I would want to see us trade at the first halfway back short. So let's say we come down, we don't stop at the trend line, we break through it, then the halfway back short ends up being the underside of the trend line, and you can look at that as a short play to maybe take us back down and retest this 42.17. But in the meantime, we need to see some sort of a break. And today, we had a little bit of a chance of that this morning, but we were not able to get some continuation. I did put on some puts at the close on Friday, and I took a portion of those off this morning at the open about, maybe 40 minutes or so after the bell, because what I was seeing, so we opened up and the breadth was pretty negative. And then we go to the 5-minute chart here. We actually rallied towards this halfway back short here, the very first halfway back on the 5-minute, the trading hours only. So just using the morning's high to the morning's low. At that point in the day, it was about half hour into the day. We came back to that halfway back, and the breadth actually got more negative. So we got more bearish. So this was a great opportunity to put on a short, and that one, 715. So it was right here, and actually, we get very granular here. So drawing up the next retracement, we had a series of longs here. So we're going up at this point. Market's going up. The breadth is getting weaker. We're at like -6, and then we ended up at about -8 to 1. So breadth was getting weaker as we were climbing, and we were holding the 61/8, and then we failed the 61/8 here on this little candles break. And so just drawing up, and here was a swing low that we took out and broke, drawing up the next short, and then that traded at 43.50. You can also wait for a little bit bigger break. That traded at 44.42. Really a 41.75 was the entry there. And then that ran us down into new lows, but we weren't able to complete to the negative 23% target. So this one ran me down. I got out right above this swing high here. It was a 44.35.50. Then a little bit later, we had another 5-minute halfway back short trade. We had made new lows, but we didn't complete to the negative 23% target. And that one was over here. I drew it up like this as the short. It was a 44.3675. We actually took some heat, came a tick away from the stop, but then rolled over and made it to a first target of 3 points. Was able to tighten the stop to break even, but then that was the point where we started to rally. We didn't have a low tick at lows. There really wasn't a major kind of flipping point, if you will, but we did have a halfway back long trade like this. Wasn't the perfect, it wasn't the cleanest. We traded through the 61.8, but it did hold us 50%, and then that kind of took us higher. So this morning, the breath was kind of that turning point, because we didn't have a low tick at lows, but what was happening is we were coming down on the second time to lows. The breath was actually getting stronger, and we made it all the way up to like -3 to 1, and we were still down kind of near lows of the day, or just slightly off lows of the day. And so that was the point where I closed out a portion, like a little over half of my puts, because the last handful of days that we've had these sell-offs, they've been ended up with bottoming tails. Look back here, sell-off intraday, then rally into the close, sell-off intraday, rally into the close. And so I thought today we'd have some potential to get some follow-through to the downside. But once I started to see the breath changing direction, and then us starting to break halfway back shorts, I just kind of had to take what gains I had at that point, and I'm going to keep the rest just in case, even if we get, so the portions that I sold off today had an expiration of this Friday, and that was part of the reason that I closed them out. The other half that I've got, the ones that I have left, are, I think it was August 30th. There was a couple weeks out, so I had a little bit more time to work with. So if we get a rollover, that would be certainly beneficial to the put side. If we get a gap up and go, maybe 2 of those in a row, I would look to maybe roll those up some strikes, and then capitalize, maybe get a little bit more time, and then capitalize on a potential down move there. But one thing to keep in mind is that times are really good right now if you're invested in the markets, whether it's the stock market here or real estate. And it's a really good time to make sure all your ducks are in a row, that you've got a good solid cash position. If you don't have your ducks in a row, if you've got some outstanding debts and you don't have much cash, not a bad time to cash in on some investments. And you just don't want to get caught with your pants down when the tide goes out, as Warren Buffett likes to say. But just like when COVID first hit last year, a very unexpected event, you don't want to get caught in a situation where you're wishing you would have taken some profits off the table. So building up the cash positions so that you can take advantage when opportunity presents itself. And if you've already got enough cash set aside, then by all means just keep on pumping money into trades, into investments, into real estate or whatever your niche is. But it doesn't hurt to be a little bit more conservative when times are super good, so that when even if it's a couple years from now, when those opportunities do present themselves, you've got the cash, you're in a position to jump on the deal, and then you can ride the next wave up, and you're sitting pretty. So the breath was a big key today in the intraday time frame, and so it's helpful to compare different days, like compare trend days to other trend days. look at range-bound days. Look at these days where we have these intraday reversals and kind of compare them to one another, because you can start to pick out different indications with things like the Bradley Advanced Decline line, the ticks, that might signal, at the point today when we were just down at lows and it was a big body, just a big red bar. If you're comparing different types of days, you may end up noticing a signal that you could then capitalize on, whether it's signs of a range-bound day, signs of a trend day, or signs of a day like today, where we have a kind of a divergence in the breadth, and then we end up reversing and working our way towards closing up at highs here. So, the last thing I want to leave you with is, if you haven't read the book, The Millionaire Mind, it's a really great read. I actually had not read it until about a week and a half ago or so, but it's a good read. There's a lot of other similar titles out there, but this one is the Thomas Stanley, Millionaire Mind. It's a good read, and if you've already got lots of money in the bank, you'll probably find a lot of times where you're nodding your head and saying, "Yep, I do that. Oh yeah, I did that." But it's a good read, entertaining read, and for those that are interested in building building wealth, it's a really good read. So with that, tomorrow I'll be doing a live trading session. You can check that out, eminimind.com/VIP. I hope you have a great week of trading, and I will talk to you all soon.